Thank you, Kevin. Thank you very much. All right, so I'm at a little bit of a disadvantage here this morning. I use one of these little, it's either pronounced Wacom or Wacom or whatever. It's this little thing I can draw on my screen with digital ink. So what I'm going to do here is I'm going to make sure that it's working. It's a new one. I just got it last night. I was trying to install it this morning. If you can hear me, just give me a yes, and then I usually have 6 monitors on this thing, and I don't have it set up to only draw on one, so I have to be careful. It's going to look like a little third grader drawing here for a few seconds, just because I'm not used to the new one. It's a little faster. All right, answer the question here. If you can, what does this plus this equal? Charlie says 55. Well, I guess if you're using Charlie's math is a little leveraged. I'm going to reset my mic real quick. Audio 1 2, audio 1 2, and we're going to get started. Is in fact working. All right, cool. So welcome to the webinar. What I'm going to do with you, first I'm going to read you the disclaimer. So warning, danger, Will Robinson. You're probably going to lose all of your money as you go on your journey to be a professional trader. It's just the way it is. Most of us take anywhere from 3 to 5 years. Some of us take 8 years to figure out how to do this stuff. And there's a couple different ways you can kind of approach that. You can do School of Hard Knocks. You can find somebody that's done what you've done in the past, or what they've done in the past, and copy what they've done. That works out pretty good. You can read some books. You can take courses, stuff like that. There's a bunch of different ways, but heads up, you're going to have to put your time in, and it's going to be painful, and it's going to suck. But if you like learning about this stuff and you're passionate about it, you got a decent shot at making it. And I've seen all kinds of statistics saying anywhere from only 10% of us are profitable, and I've seen it as high as 25%. So it depends on who's doing the study. So really important. I'm a registered Series 3 and Series 30. So I need you to read this CFTC rule here, because the governing body that is over me is the CFTC and the NFA. Now, what that means, I'm a Series 30 and I'm a Series 3. And all that means is I took a couple of tests and got 70s on them. It's not really that big of a deal. Now, the reason I did that is because I own a futures IB, because I trade a lot of futures. Now, I trade anything and everything. If the market, if there's a market moving and I think I can make money from it, I'll trade it. It doesn't really matter to me what it is. I think I've traded most markets out there, not all, but I've traded a lot of them. Probably about the only thing I haven't traded is the butter market. So it was really important that you never trade with more money than you can afford to lose. Some of this stuff that we do is really highly leveraged, and if you get upside down on it, it'll rip your head off and you'll lose a ton of money. Now, I like to take the disclaimer a little bit further and say your trading career will probably end up like a bad country song in reverse. Your wife's going to leave you, probably for your best friend, because it's a country song. Your dog's going to die. There are no cats in country songs, so they're not allowed. They're going to repossess your Ford or your Chevy truck, and they are going to foreclose on either your single wide or your double wide trailer. Now, I can make fun about that because I am a redneck from Kentucky, so I'm cool on that situation. If you understand the disclaimer of what you're doing and what your little quest is about, and you understand that you could lose all your money, just give me a yes. So if the CFTC or the NFA, if they audit this thing, they'll be like, well, he did his job. He really tried to tell them how it really works, and he told them that they all have a snowball's chance in hell of ever making any money. All right, cool. So with that being said, let's get started. I'm going to give you a real quick background on me, what I do, and how I got here, and why you may want to listen to some of the stuff that I'm going to share with you today. My name is Hubert Senters. This is my no BS approach to trading and investing. I didn't always used to be used to making lots of money. I will tell you that a lot of people think you start from here at the big S-T-A-R-T, and everybody's goal here is the end goal, right? You want to be a millionaire, obviously, and I'll just put cash signs up here for however much money you think you're going to try to make, or what's your ultimate goal. I've never seen anybody go straight line from here to here. Never, ever, ever. I've never seen it happen. They're almost always an 8 to 10 year overnight success. I've also never seen it go like this, where they just systematically got a little bit better. It sounds neat. I've just never seen anybody do it. Now, I am fortunate enough to have done it a couple times, and here's how it works out for most of me and my buddies. You start out and you get a little success, or you start out and you get a lot of failure. And then you just make sure you keep your eye on the prize, and your journey goes all over the place. And you eventually get to where you were going to go as long as you focus on it enough. Now, once you've made your first million, the first million is the hardest in anything. The second, third, fourth, fifth, and 10 million next on down the line is a lot easier to do. Now, a lot of people will tell you that all they do is focus on their passion or what they're good at. I don't think anybody's going to pay me to eat pizza and drink beer and watch TV. I've never been able to convince somebody of it. So you're going to have to learn some skills in order to do some things, add value to some other people's lives. So I make my money 3 different ways: trading and investing. Man, my little thing here is messed up. Trading and investing. I do it with businesses, and I do it with real estate. All right, so those are the 3 main ways that I make money. I recommend that you have all 3 of them in your portfolio. All right. Now, I grew up in the coal mines of eastern Kentucky. I didn't grow up super poor. I definitely didn't grow up wealthy. Middle class family. Both my mother and father were factory workers that worked for American Standard, the people that make faucets and commodes and stuff like that, sinks. And at 17, I decided I was going to leave and go on my own little quest and figure out if I could find out how to be a millionaire. Right, that was always my dream, and make a lot of money. And in the process, I had to go volunteer or pay other people or work for other people and figure out what they were doing. And oddly enough, really successful, driven, wealthy individuals will share a lot of information with you. So this is a picture of me and Paula Abdul outside the office in Phoenix. She's actually a little shorter than that. She's got 6-inch heels on. This is a picture of me and Sir Richard Branson. I help his charitable foundation raise money. And both he and I both suffer from dyslexia. He's got longer hair than I do, but in this picture I've got more chins than him, which means I'm probably going to die of a massive heart attack before he does, because he exercises every single day. This is, I call him Dr. Evil. He calls himself Dr. or Mr. Wonderful. I call him Dr. Evil. If he ever does a business deal with you, he's going to try to do a license deal and gut your business, so be careful with that. And then this is Dave Ramsey at his Christmas party. Me and Dave do business together. And this situation here is me. I'm the guy with the big square head. I'm actually in front of these 24-inch LCDs talking to you right now in front of this broadcast quality microphone. I'm not in this little monkey suit. I actually have a pair of jeans, a maroon t-shirt, and a pair of tennis shoes on, just because I'm in the Bat Cave right now. And I affectionately have an office that we call the Bat Cave because it's inside my home. In my home, when I was a kid, I used to watch a lot of Ghost of Mr. Chicken, Scooby-Doo, and Batman. I was like, man, if I ever make a lot of money, I want to have these cool bookcase stores that you see in Ghost of Mr. Chicken, Scooby-Doo, and Batman. So downstairs in my basement, which sounds kind of creepy, it's not though. You walk downstairs, it's about a 15-second commute. You pull this book right there, and you press that button, and it opens up into a little 1,500 square foot office that's got multiple rooms in it, and I got another secret bookcase in there that goes to another soundproof little recording thing. So that's where I'm coming from. I don't show you or tell you any of this to impress you. I do it to impress upon you. If a little fat redneck from Kentucky can do this, I mean, you got a good shot too. I mean, the odds are against you, but if you put in your time, grind it out, and if you work your ass off and you just keep at it, you've got a good shot at making it. All right? So congratulations. You're in the right place at the right time. You got a really good list of speakers today. What I'm going to do is I'm going to show you how to find some good stuff that you can trade options on. So that's what I'm going to focus on. I'm going to focus on, these are some things that you're going to scan for first, and then the guys behind me will tell you what different strikes and options change to deal with, okay? So how to take your trading to the next level. If you're into candlestick charts, you're going to love this. It doesn't require candlesticks, but it works a lot better. So what does this work on? It works on stocks, options, futures, forex, bonds, works on gold, and works on commodities. Now, the strategy that I'm going to share with you today is called Ichimoku cloud charts. It's a Japanese charting methodology. Now, this is going to be different, but in a good way. We're going to have fun. I do not take myself very serious. I take what I do for a living very serious. I just don't take myself very serious because, you know, life is too short, and I think you got to have fun while you're here. So here are the back-tested results of this strategy. Now, I'm not here to sell you an indicator, okay? If you want, at the end of this presentation, you'll have the opportunity to buy a course that teaches you how to use this indicator better, but I am not here to sell you an indicator. This indicator is already on your package, all right? And don't worry, I'm going to give you enough information. Even if you don't buy the course, you'll still be able to get some real good value out of today's presentation. So S&P 500 over the last 5 years, on the stock indexes, it worked on 430 out of 500 stocks. That's pretty good, about 86% success rate just on all the equities. You would have got a 33% return if you took every signal. That means if you took every long and every short and the long and the short and the long and the short. I don't recommend that you do that, because if you've got a valid uptrend like this right here, I don't think it's a real good idea to short the pops like that. You're going against the flow and the momentum. So we're going to filter out the counter trend signals, and what we're going to do is we're going to use a 3-bar confirmation. All right, so this is how you cheat a little bit, right? And if you're not trying hard and trying to beat other people, you know, you're probably not doing so well. So you got to figure out how to outthink some individuals. So that's going to increase your rate from 33% to 79%. And that's just a better number, okay? So you're going to remove the counter trend signals, and you're going to wait for a 3-bar confirmation. I know it says day, but it's actually bar. All right, so it works on, it says all, that's an asterisk. You will never hear me say guaranteed. I'll always say potential, because there are no guarantees in life. I can't guarantee you that you will be alive by the time I get done talking on this webinar. All right, so it's been profitable on 29 currencies over the last 10 years. That's a really good track record. Now, this is hypothetical. This is back-tested, but it's to reinforce that that does have a good track record. Now, I'm going to dig into the meat of the PowerPoint presentation, and then we're going to do a lot of live charts, okay? Because as powerful as theory is only theory. So here in the South, there's a thing where you can catch snakes. Like you can go catch a copperhead or a timber rattler. Now, if you've never caught a snake before, if someone tries to teach you how to catch a snake until you actually do it, in theory, it sounds just wonderful. Pin its head down, run your head down the stick, and then grab the snake behind the head. In reality, you're going to be scared shitless when you do that. You're going to be shaking. You're going to be sweating bullets. You're going to be unnerved. All right. So we're going to talk about theory first, and then we'll go straight into application. So my time frames that I like with this thing is daily, hourly, and 60-minute. Daily, hourly, 60-minute, daily, hourly, and then 10-minute. I'm sorry, daily, hourly, and 10-minute. So this is the most important slide in my presentation. Okay. Time frame selection. If you don't get this, you will be lost. So let's go through this. Do you have a slide that says time frame selection on your GoToWebinar pane? If you do, just give me a yes, and then I'll move on. All right, cool. So here's the ones I like. I like using a daily, and the reason I like using a daily is because that means I can be in the trade for weeks of a time. And usually my most profitable trades are anywhere from 3 days to 21 days. That's my nice little short swing trades where it's kind of my sweet spot for my profit, okay? And it's going to extend to the right 1 month, so 20 to 30 bars. Now, an hourly chart means I'm going to be in it days at a time, which implies days would be more than 1. So I'm going to be in it 2, 3, or more days. So days at a time. So, and it's going to extend to the right side of the chart a minimum of 3 days. And then 10-minute time frame means I'm going to be in that trade for about 4 hours. Now, if you want to trade lower time frames, you can. I usually don't. I kind of like going daily, hourly, 10-minute. It keeps me on the right side of the market. Do I miss some of the intraday gyrations? Yeah, I do, but I'm okay with that. I mean, I've learned over the past 22 years trading that you kind of got to go where your sweet spot is. And, you know, I've done the scalping in and out for 1 or 2 ticks all day long for 8 hours. At the end of the day, your eyes are burning so bad, you end up having to down, a big bottle of vodka or bourbon or whatever you're into, and it's just hard on your liver just because it's so stressful, and your kidneys. So this is what you want. It is the #1 technique used in Japan. 7 years in a row. 7 years in a row, it has been the #1 technique used in Japan. You're going to know exactly what's happening in seconds. And when I say it's the number one technique used, there's a number one best-selling book in Japan. It's been the number one bestseller 7 years in a row, and this is the main technique in that book. And if you've ever tried to translate something from Japanese to English, if you consider what I speak as English, it's kind of a pain in the butt and it can get expensive. It's really good. It means at a glance or equilibrium. All right, so at a glance, you're going to immediately know what's going on with the charts. It's really good at defining trends and signals, and it's designed to produce really clear signals. So let's dig in. The edge for you now, a lot of indicators will show you the past. Some will show you the present, and there's only a handful or very few that will show you the future. This thing will show you all three, which is one of the reasons I like it so much. So I've got a buddy of mine here, real good friend, Nigel from Hawkeye, and we were talking yesterday about indicators and stuff. And as we were walking through it, we were talking about some of the advantages of volume and stuff that does not lag the market. So very, very interesting. There's not a whole lot of good indicators out there that don't do much lagging and stuff. So it was an interesting conversation we were having yesterday. So this is going to give you past, present, and future. So let's take a look at how this does it. So now, do you see a black chart on your screen that looks like it's got like a little blue string going through it, and it's going? It's a valid uptrend. You see that? All right, cool. So I'm going to teach you what the components are. And like I said, this new little tablet I'm using is a more sensitive than my old one, so my hand's going to be a little jerky. So this is called the cloud, C-L-O-U-D. You see that where it says cloud? That little blue thing is considered the cloud. Now the theory of Ichimoku is if this thing, whatever you're trading, if the price action is above this blue thing, which is called the cloud, it's considered in a bullish uptrend. Okay? A bullish uptrend. Now, if whatever you're trading is below the cloud, that's considered bearish and in a downtrend. Now, here's how this thing works in theory. This should be good, nice, little fluffy support or a little mini trampoline. There's support there, support there. This one didn't work great, but this one held. This one held pretty good, that one held pretty good, that one held pretty good, and that one held pretty good. So in these charts, which are old, so don't worry about it, we're going to go through all live stuff here in a minute. If it was to sell off, it might sell off here to the blue cloud, bounce off there and go higher. As you can see, the cloud is going sideways to slightly higher, which is telling you in the future this thing should go higher, but if it sells off, this is where it'll sell off to. All right, so that's the first part of the cloud, C-L-O-U-D. There we go. Second part, this is called the turning line, T-U-R-N, turning line. And this is a 9-period midpoint average. It's not a 9-point moving average, which is different. Now, this is going to be the fast support. There's going to be a medium support. There will be the slow support, and then there'll be a lagging line. So number one, we've got two components so far. All right, now the third part here, let's do this again, C-L-O-U-D. There's the cloud. Here's the turn line, T-U-R-N, and then this is called the standard line, S-T-D. I'm just going to abbreviate that with STD. So cloud, turning, and STD. Now, the way you use these is if it breaks this yellow, if the yellow does not hold, it's probably going to sell off to the purple. If the purple doesn't hold, it's probably going to sell off to the blue. Does that make sense? Just give me a yes if you understand it so far, because I'm covering a lot of information kind of quickly so that we can get to as many charts as we can. I just want to get everybody to the same spot real quick. All right, the last thing is this big white line. This thing's called the lagging line, okay? Rodney says STD, sexually transmitted disease. Rodney, we don't need to bring your sex life into this. If you were crazy in high school and college, that's your own problem. No. So, all right, so cloud, C-L-O-U-D. Cloud, we've got the turning line, T-U-R-N. We've got the STD, which evidently Rodney's got some kind of issue with. And then L-A-G. Rodney, I'm just messing with you, man. So here we've got the cloud, we've got the turning line, we've got the standard line, and the lagging line. So this is what we're looking at. This is the past, this is now, or the present, and this is what's going to happen in the future. Does that make sense? So it's kind of like the ghost of Ghost of Christmas Past. If if it breaks the yellow, like this right here, it's going to go to the purple. If the purple doesn't hold, it's going to go to the blue. If the blue doesn't hold, heads up, you're in trouble. Things are going to get annihilated. So what are those lines based upon again? So let's go through the math of that. So does everybody understand the naming schematics right now? So we've got cloud, turning line, standard line, and lagging line. And the lagging line, let's go through how this thing's calculated. All right, here we go. So in the first one here we're going to look at, this is a up and down move of Apple when it used to trade a lot better than it does now. So here you can see Apple's in a good move. It's above the cloud, and you see how it stayed above the cloud for a long period of time, and then it crossed below right here. And now notice how the price action of Apple is below the cloud, and it's getting ready to cross back up above it. So you see how this, along this whole time, we should have stayed long. When it crossed back below, we should have stayed short, and then we cover right here. Now, this line right here, since it's the closest thing to the price action, is going to be called the turning line. How it's calculated is the turning line is the midpoint calculation where you take the high and the low of the last 9 days, and then you divide that by 2. Let's see how it's done. So here's the 9th day, which is now. You can just count back 8, 7, 6, 5, 4, 3, 2, 1. You find the low in that range. You find the high in that range. You take the high, which is 465.75, and you add it to 434.39. And I've already done the math down here for you because in high school and college, I got D's in algebra. Not B's as in boy, D as in dog. So you don't have to be a math whiz in order to do this. So you take 465 plus 434, you get 914 or 914. You then divide that by 2. That's going to give you 450.07. Now, if that confuses you, don't worry. Every platform out there just calculates it for you, so you don't have to do any of the work. So what you're going to do here is you're going to see this number, see this little tag? It says 450.07. Now, remember when I started this presentation, I said if the price action is below the cloud, then that's bearish. Well, we're below the cloud. We ran into the overhead resistance, and since we're below the cloud, we should start to roll back over, right? So if we break 450.07, where's the next place we should go to? So if we short this, say, hey, this is a nasty downtrend, we're going to short it when it goes below that red line. Where's our first target going to be? Yep, you guessed it, this little green line here. Now what is that? Well, if you look over here to the right, it's 425.42. So we would short it at 450, and then we'd cover some of it at 425.42. Let's go figure out how the standard line is calculated, all right? The standard line is calculated by the midpoint of the high and the low of the last 26 sessions. You're going to take the high and the low of the last 26 bars, then divide them by 2, and that number will be your midpoint. So let's take a look at the standard line. Standard line, the same thing. Remember, the one closest to the price action is the turning line. That's the fast. The next closest one is going to be the STD, which is the mid speed one. So let's go take a look at that one. So we're going to take today, and we're going to count back 26 bars. We're going to find the low. We're going to find the high. Add these 2 suckers up. And if you guys got questions, if you'll hold them till the end, I'll answer every single one of them. It'll just throw me down a rabbit hole, and we'll be here too long. I don't want to take up anybody else's time. So you're going to add those 2 up, and you're going to divide that by 2. That's going to give you 425.42. So that's how you come up with that number. All right. All right. Cloud span A. Cloud span A. The midpoint of the turning line and the standard line shifted 26 bars forward. So it looks like this. You're going to take the turning line, then you're going to take the standard line. That's the turn. You're going to get the midpoint between those and shift it into the future 26 bars. Pretty neat, right? Same thing here. Standard line, turning line, midpoint, shift in the future. Cloud span B is just a bigger calculation of that. Midpoint of the high and the low of the last 52 sessions shifted. So it looks like this. What you're going to do is you're going to take an issue like if this was the day, you're going to count back 52 bars, and then you're going to get the midpoint, which is right here, and you're going to shift that in the future 26 bars. Pretty simple, right? All right, the lagging line, It's called the lagging line because it lags price, and it's the lagging part of this indicator. The lagging line, the price line, closed, shifted 26 bars. Super simple. So all you're going to do is you're going to take a look at today's price action right here at day number 1, which would be now, and you're going to shift the price action back in the future, not back in the future, back in the past, 26 bars. So don't make it complicated because all this stuff is done for you by your trading platform and your charting platform. I know that some people just like to know how things are calculated. These are all the standing default settings in this indicator. I do not screw with the settings at all. All right, let's go through some actual signals. Lagging line crossing the cloud. When the lagging line crosses the cloud, it is the strongest signal that you can possibly take. It's also the slowest, so it's not the best signal in my opinion. But if you can get it to confirm, it's great, right? But it's kind of slow. The Goldilocks trade, the sweet spot, is when the price crosses the cloud. And there's 3 different times it'll cross the cloud, with 1 bar, 2 bar, or 3 bar. 1 would be aggressive, 2 would be moderate, 3 would be conservative. Also, the price and the lagging line will touch the cloud. The cloud spans crossing, when the red and the blue clouds cross and change color is a sign. The turning lines crossing the standard line. So very fast signal can be inconsistent if you are not following the trend. So make sure that you do follow the trend in order to stay consistent. All right, so does everybody have a white chart with a bunch of rainbow-looking colors on your chart? So this is the lagging line. Now you remember the rule on the lagging line? It shifts back 26 bars, right? So when this lagging line crosses the cloud, that's an ultimate short signal. Now, unfortunately, it doesn't mean the price action is here. If you remember the rule, you got to shift it ahead 26 bars. So you go 1, 2, 3, 4, 5, 6, 26 is about in this zone somewhere right in here. That's still not bad if you shorted Apple at, 580-ish, and then you can see this lagging line down here. It hasn't crossed, and you'd have to wait for it to cross above here before you covered. So you'd short it here, and then you'd cover it once the lagging line moved back above the cloud. Now, that doesn't give you very much meat of the move, but it is the strongest, but it's also the slowest signal. So the one that I like better is this. When you have 1, 2, or 3 bars close below the cloud, that's a good signal to go short, or in this case, see how it's getting ready to go back above? So if we had 1, 2, or 3 bars above the cloud, we could go ahead and get long there on an aggressive long in this on this piece of picked PowerPoint from Apple. Does that make sense? Now, here's some other counter trend signals you can take. If you've got the lagging line touching the cloud, it's a counter trend signal, and the price action touching the signal. As long as the price action of what you're trading is below the cloud, ideally we want to stay on the short side. As long as the price action is above the cloud, we kind of want to stay on the long side. Okay. All right, now this is the fastest signal. It's also an inconsistent signal if you are not on the right side of the trend. Okay. So in this case right here, we should stay long and long only, in my opinion. And you can see where the red and the green cross. I would not short that. Okay. I would let it fall below the cloud and then cross up once, criss, cross, and then I would short that there. Criss, cross, short that here. Criss, cross, short that there. So those are some example signals. All right. Bullish signals. Price above the cloud is bullish. Price in the cloud are bullish if they come from the bullish side, in other words, from the high side. The lagging line crossing the cloud is the main signal of trend change. Price crossing the cloud is a earlier but less reliable warning of trend change. Audio 1, 2. We still have sound, Victor. Just give me a yes if you can still hear me. And then price and lagging line will often find support at the cloud's edges. Cloud spans crossing may be a sign that the trend is changing. And be on the lookout for thick clouds after a run-up, which could mean a trend change is about to happen. All right. If you can hear me, give me a yes. I'm going to take just a 2-second break here. Well, about 5 seconds. I'm going to put the bearish signals up. I don't need to read these to you. I know you can read, right? Or hopefully you can read. I'm just going to take a quick swig here of water, and actually it's Mountain Dew this morning, kind of weird. I'm going to come right back to you and just read these real quick. All right. Yes, Traders Webinar. I think they do send out the recordings, but you can ask those guys about that. Those guys are a good crew. All right. So let's take a look. I already talked about the back test rules. I already talked about how well it works in the back testing model, which means it's worth your while to look at this. Time frame selection. Remember, we're going to be looking at daily, hourly, and a 10-minute time frame. And time frame selection is very important. My favorite one is daily, hourly, 10-minute. That's what back tested the best for me, and those are the ones I tend to follow the most. Stops to use. I usually use a parabolic SAR, and the bottom of the cloud if you're long, and the top of the cloud if you're short. Please define the cloud. I kind of already did that with the math, but you don't have to know exactly how it is defined. Let's take a look at some live charts, okay? Let's do this. So my favorite chart to look at here would be a chart of when something is crossing above or below the cloud. So I got a little bit of time here. I think I'll be able to go through the major markets. So let's do this. Let's go through. I'm going to go through the major market indexes to kind of help you figure out where the market's going. And then I'm going to show you how to scan for if the thing is breaking above or below the cloud. So watch this. So let's do this first at ES. So now, based upon the information that you know about the cloud, where are we? Are we in a good place or a bad place? Kind of depends on what you're trying to do, right? So we are above the cloud, which that means long. We were above the yellow broke, and now we're below the purple. So where's this thing probably going to go? The S&P is probably going to sell off to the cloud in this area. Overall, it still thinks it's going to go higher, but it's going to sell off. Does that make sense? You got that? So S&P is in still good shape, but it's going to sell off, and you're going to be able to buy it at a discount and then pop it up. Let's look at the Dow, at YM. Dow, it closed below the yellow, now below the purple, still in a valid uptrend. It's going to sell off to the cloud. The cloud says it's still in a valid uptrend, so you're going to buy it when it gets to the cloud. Take a look at the Russell. Uh-oh, look here. Russell's in worse shape. So it did have about a half a dozen bars above the cloud, but you see how the lagging line is going back down with it faster than the other two markets were? It broke the yellow, it broke the purple. If this red cloud does not hold and it breaks below it here, then it'll drop like a stone to about 1080. Hasn't happened yet, but it's a lot weaker than the other two markets. At NQ, this is the NASDAQ, so based upon the NASDAQ today, if we hit 45.23, we would actually want to get long NASDAQ with a tight stop loss on the anticipation of it bouncing back up to the yellow line. Let's take a look at a couple of other markets here. Let's take a look at crude oil. Oh, mama, look at that thing. That thing looks nasty. Now, if you think it's just good for just like little trades, look at this. Look how well it called crude oil back here. That's a short, overhead resistance, bop it in the head, bop it in the head. Now, look, it did do a transition, right? So I'm not here to blow smoke up your ear and to tell you that this thing works all the time, because I don't know anything that works all the time. But look, here was a long. It went above the cloud, and it kind of traded sideways, and then it said, hey, you know what? I changed my mind. I'm back below the cloud. Okay, so that's a short. This is a short. That's a short. It tried to close above the cloud, but this white lagging line said, the price action said, I'm going higher, and the lagging line goes, you're not going very much higher, because I'm not above that cloud. And now look here, crude oil is going to take out those lows. Now, is it going to go to $20? I don't think so, but it's definitely going to head to these lows. Let's take a look at the bond market. All right, so the bond market, I am currently short the 30-year bond. Am I following my rules by doing this? Yes. I've got 1, 2, 3 bars below the cloud. The lagging line is with me. Now, I'm short the 30-year. Where should I add to my position at? Yellow line and purple line. Does that make sense? Now, if you're sitting there going, well, I'm not short the bonds, what could I do? Well, you could go the other direction, but you've got limited potential, because this is the overhead resistance, so you would get long, but you're only going to ride it to about right here, or right here. Best case scenario would be 156. Let's take a look at the 10-year at TY. 10-year. So in this case scenario, 10-year was selling off. So I should add more short to my 10-year short position right there. Let's take a look at FGBL, which is the Eurobond. Eurobond, look at there. That's a stronger market there. All right. So this one sold off into the cloud, closed above the yellow and the purple. This one's probably going to go back to 158. So you see how the Bund is a better long than our 10-year note and our 30-year bond? It's just stronger. It just is. All right, what else can we look at here? Let's take a look at, you guys throw me some symbols. The only thing I ever ask is make it bold, caps, put cap locks on it because I can read it, and I'll show you a few things real quick here. I got just a little bit more time. Amgen, AMGN. I can't get to all of them, but I'll do a few here. Amgen, AMGN, if I can type. Amgen is a better short than it is a long, but it's stuck in the cloud, so wait on that thing. PCLN. Priceline is a long, and I would buy it on the cloud right here at 1275 with the anticipated bounce. Let's see here. Netflix, NFLX. Oh, Netflix. Netflix was a long, but it's about to be a short. Interesting, right? Facebook. Facebook is a long right here at the turning line. Stop would be 101.45. Target would be like 120. BBY, Charlie, the SPY is just the S&P. The SPY is just basically the S&P. Look at this one here. BBBY, Bed Bath & Beyond. That's a massive short. Look at that thing. That looks so nasty. I mean, nasty in a good way. It's going lower. So that's a short right here at 54.55. Stop loss of 57.79. Target of $45. ExxonMobil. I kind of like ExxonMobil. If ExxonMobil can get down here to the area of about 76, I'd be a buyer. Because it's above the cloud, lagging line confirms. I want to be a buyer when it touches that blue cloud. AAPL, Apple. Apple is a good long when it hits about 110. Now, watch what I can do with TradeStation. This is pretty cool. So you see this where it says Ichimoku Cloud? Watch this. I can scroll down here. You see where it says S&P 500? This is what I was telling you about the other day, Nigel. So right here, I can go over like this. Now watch. You see how I've got the S&P 500? I can just double left click the price location, go click, 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 click. And now this will tell me if something's newly above the cloud or newly below, new below, new below, new above, new above, new above, right? Now, this is probably a 5-minute chart, and this is a daily, so they won't sync up. But you can also do this, like if you don't have TradeStation, TOS can do it. If you don't have TOS, watch this, I'll show you another thing. STOCKCHARTS, stock charts. Watch how cool this is. So go to stockcharts.com. I have no affiliation with these guys whatsoever. This is a free charting platform. Scroll down here to where it goes predefined scan results. Click one time. And then scroll down here past candlestick patterns and go down here to where it says Ichimoku patterns. And you see where it says moved above the cloud, moved below the cloud. So there's 83 that's moved above, 353 that moved below. Hold down your control key and left click. And then what this thing will do is it'll sort everything that's above that's just recently closed above the cloud and everything that's recently closed below the cloud. Now we're probably all trying to do it at the same time, so we're going to lock up their server. So I'll just let this thing do its little math, and it'll click open here in just a minute. While I'm waiting for it to open here, I'll show you how to do this one more time. You go to stockcharts.com. You scroll down here to predefined scan results. You scroll down here to candlestick patterns, and then you go moved above the cloud, moved below the cloud. Looks like their server's a little slow. And it'll even chart it for you. You just click a few buttons, and it'll give you a list of, hey, these have moved above the cloud, these have moved below the cloud. Let me see if I can get one of them to work here for you. Moved above, moved below. Looks like it's not going to work. It usually works. They're just a little slow today. Like I said, I don't have any financial arrangements with them at all. There you go. Here you go. Oh, it wouldn't do it. This doesn't do it. Nope. Evidently they're having data issues. We try it just a couple more times here because they're usually pretty good. But there's a few people trying to do it at the same time. Sometimes it's a little slower. I'll leave that to let it do its math as we come over here and do just a few more symbols on things. So let me get back to my PowerPoint. I'll let that thing work, and then I'll come back to that, okay? Evidently, it's just a little slower today. All right, so let's get back to the PowerPoint. So does this make sense so far? You guys see how easy it is to look at a chart and go, it's either up, down, or and it's sideways. If it's sideways, you just don't want to mess with it. If it's up or down, all right, here we go. They finally kicked us out some good stuff. All right, so here we go. So here is move below the cloud, Ichimoku cloud. So then what I do is I sort this by volume. And then once I sort it by volume by clicking there, or sort it by volume clicking here, I can then figure out what I'm trading. Now, I don't trade stuff that's on weird exchanges like over-the-counter market. That makes no sense. You don't trade penny stocks. And you can sort these alphabetically by exchange, or you can sort them by volume, like somebody that's taking real good volume. So you just go down through those and look at those. So let me see if I can, now it's slow on the sort feature too, obviously. Let's see if we can find something that's decent here by just looking really quickly. What are these? These are the ones that are moved above the cloud. Here you go, volume. General Mills Incorporated, GIS, that may work. And then if you don't have charts, what you can do is you can just left click on this chart button here, and then just select like you just want to do the simple overlay, and just go, I want Ichimoku full, I want none, and then make all of these none. And like I said, if you don't have good charts like TradeStation, eSignal, Ninja, you know, Thinkorswim, this will get. All right, so here you go. General Mills has moved into the cloud. It was in the cloud and it moved back above the cloud. So that's what's the scanner name and toss? It should be Ichimoku. You just have to do a custom scan. Here's predefined here. So here's JCPenney. All right. That's not going to be good for JCPenney. Move back below the cloud. So let's take a look at JCPenney over here. We'll just put it in the chart. JCPenney. Uh-oh, look. As it was going through the cloud, boom, closed below the cloud. So JCPenney is going to get hurt again. Yep. GE, we'll take a look here. GE. No, GE is way above the cloud. It's not in the cloud at all. It's way above. You want to. The best signals are to take when it's crossing above or below. All right, so those are some trade setups. We've looked at live charts. Let me show you what I've got for you here. So these are some success stories. The course was awesome. I've taken one bond trade and made over 900. Do you think I'm happy? I just entered the bond trade, shorted again where I took profits earlier today. After you made me greedy for possible further drops, I'm happy dancing. I don't know what happy dancing is, but Mary's doing it. This is the first time I've had a successful trade during a course. I have the hardest head in the world. You couldn't have made it simpler. Dude, thanks. You're likely the only reason I've kept at it with this trading. Now that I'm profitable, I can't thank you enough. It was really great, and I can't wait to attend your gold trading class. Thank you so much, Greg. Here's one from Ron. Webinar series was a great experience, very informative, educational, lots of fun. But that's no surprise. All your courses have been great learning opportunities and great values. All right, so I am asking you if you want to be one of our next potential success stories. So we're inviting you to join us. So who is this for? If you're serious about making real money in the markets, if you're looking for a proven system, if you can follow a simple set of rules and directions, and if you understand that you physically have to work and do something, I can't do all this for you. If you understand that your success is directly related to you actually taking action on trades, all right? You got to take some responsibility there. Now, who is this not for? If you are a holy grail seeker, if you think you're going to take $5,000 and by the end of December you're going to make $1 million, then this course is definitely not for you. It's kind of unrealistic goal. If you, well, suffer from hopium, where you hope that your $5,000 account will make enough money for you to pay your mortgage for the next 12 months, probably not going to happen, right? This is called trading. It's not called guaranteed wealth generation with no risk. It's the same reason they don't call fishing catching and they don't call hunting killing, because lots of times it doesn't happen, right? And if you also suffer from guru surfers, if you suffer from guru-itis, if you follow me and 45 other trading gurus online, my advice would be, say, pick 2 or 3. Pick about 3 guys or gals that you're into. Learn as much as you can from those people. Try to steal their ideals, which they won't have a problem with. That's what we all do anyway. We all steal from each other's ideals and just make it our own. Incorporate it into your trading plan and try to actually execute that plan. All right. And if you can't make a decision, obviously it's not for you. If you like to make things more complicated for no good reason, I'm not your guy. I try to make things simple. All right, 3 types of people. There are those that make things happen, there are those that watch things happen, and there are those that asked what just happened. Hopefully you're in the top 2 groups. So here's a fraction of what you'll learn in this course. So give me a yes if you can still hear me. A couple people saying they're having audio issues. I'm still going to have 10 minutes to do nothing but questions and also charts, okay? So I got 10 more minutes, I think. So here's a fraction of what you'll learn. The #1 best-selling Ichimoku course on the market in the English-speaking world. 7 proven setups, trading rules and indicator settings. I'm going to give you a checklist with cheat sheets, with entries and exits, stop losses and targets. I'm going to teach you how to scan the markets with Ichimoku. What we do is we've got videos on every platform out there that has Ichimoku, and we show you how to scan for it if they have a scanner. If they don't have a scanner, you just use that stock chart thing that I just showed you, and you can scan for it. It's a little harder. You got to do actually a little bit more work, but it's still good enough for government work. How to filter out the best trades. You're never going to have to guess what to do next, and I'll show you how to avoid some head fakes. There are a couple head fakes that you need to know about so that you don't get your head ripped off. So here is your offer, but before we talk about the offer, you have absolutely 0 risk. It's a 100% satisfaction guaranteed, no questions asked. If you do not love it, I do not want your money. Life is too short, and I don't need the headache or the drama, right? My goal is to always over-deliver, period, and you should get a 10 times X return on your investment, all right? So here is the offer. If you go to realtraderswebinar.com/Hubert, there you go. I think Kevin just posted it right there for you. You can also call the telephone number, but that link right there will do it for you right there. Here's what you're going to get. Ichimoku Cloud Charting Secrets. It's a $197 value. How to use Ichimoku with candlesticks, which will make it better for you, $97. Then we're going to do 4 follow-up webinars, $97, and then 1 day of live trading. So here's what you're going to do. Once you get the course, and it's an online course on demand, you're going to go through the videos, you're going to go through the lessons, you're going to learn all the rules of the trade setups, and then once a week on Tuesday, we're going to get together, scan the markets, and find these trades. And if you have any questions, I'll answer your questions every Tuesday, okay? And then also, if you want to come into the live trading room for a day or a week, I don't really care how long you want to come in for, you just let us know. It's $97. So all this valued at $488. Special offer on today's webinar, $97. If you go to realtraderswebinar.com/Hubert, there is a catch on this thing. It's only for the first 50 people. All right. So there is your offer. I'm going to put it right here above my chart right here, realtraderswebinar.com/Hubert. You can also call the telephone number, area code 859-963-3445. Actually, let's do this because I think Michelle's out today. So if you do that, you'll call and the phone will just ring off the hook. She's actually took off vacation today. So just use that URL right there. Now, questions. I use MT4. What do you think? MT4 is fine. It's a good Forex platform. Now, I've taken your course and loved it. You always over-deliver. Good for people who can sit in front of the computer. Oh, thanks, Jim. Appreciate it. Can TOS scan for above and below the cloud? Yes, it can, Rich. It doesn't do it as easy as TradeStation, but it does do it. But in the video, in the course, we walk you through it. It's not hard. It's just different. When is the course date and time? Jim, it's an on-demand course. Right now, if you go ahead and put your credit card information into this form right here, Ichimoku 101, put your first name, your last name, all your credit card information, hit place order, then you will be sent a login to immediately start watching the videos. And then every Tuesday, we meet and go over if you have any questions, and we scan the markets together. Can you please show show up the content and price slide again, please. It's $97 for the course, and the link is right here, realtraderswebinar.com/Hubert. But it's $97 for the first 50 people. Does TOS have Ichimoku? Yes, TOS has Ichimoku. They definitely do. Does the color of the cloud impact your trade decision price being below a cloud? Not so much. I mean, as long as the price is above the cloud, I still stay bullish, even if the cloud's red. It doesn't happen that often, so I don't use it in that way. Yeah. Let me see. I've got some other questions here. Any other questions? JC Penny, is JC Penny still alive? AR still alive? Do you have a trading room, and what is the normal price? Yes, we do, Pierce. Go through this course first, though, because if you try to join our trading room without having any Ichimoku, you'll kind of be lost. What is the success rate? It depends on like if you're trading it on a 1-minute chart, it's not going to be great because it's not designed for that. But I already showed you the back testing methodology on those. In currencies, it's got a good 10-year track record. In equities, it's got a good 3 to 5 year track record that we tested for. So it's really good. It's not going to work on everything, but it's going to work on most things. How did you make the big bucks? A couple of different ways. Trading, and also sold a company. So that's 2 ways. And then I also still own bunches of different other companies. I kind of like doing both. I like trading, and I like companies. So when drawdowns happen, which drawdowns happen to everybody, at least I have another form of a cash flow and wealth generation. Same thing. If you're getting your teeth kicked in with a company, usually your trading is doing pretty good. What companies did you sell? I've sold a couple, Tim. Yeah. All right, let's do some symbols here. Give me some symbols. It is just a $97. It's not a $97 recurring. It's a $97 one time. How did you combine? I combined the daily, I cover that in the course. How I combine the daily, the hourly, and the 60 or the daily, the 60-minute, and the 10-minute. I cover that in the course. I don't have enough time to get into it right now, but it is important. SPY is the same thing as the S&P. It's going to go lower. It's probably going to go to 196. Will I get a replay of this webinar? I think you will too. BA is a long, or if you're going to get long, you'd be long today at 76.19. Stop loss would be around 74.32. Target would be 81 bucks. I got 4 more minutes, guys. GILD is a buy right here, but if it goes through that cloud, it's going to be a short. Okay. Is access to the course lifetime? Yes, Richard. Either your lifetime or my lifetime, and one of us will die. I'm hoping it's you instead of me, just self-servingly. But yeah, it's lifetime access. Yeah. Disney, DIS, good looking long. I'd buy Disney on a pullback at 114, and then the target would be like 125. Under what conditions do you honor stops versus letting trades play out according to predicted? No. I always honor stops. Period. On every single trade that I do, I use stop losses, and if I hit, Richard said I'm first. That's funny. Hey, that's right. It's always good to be a winner. What was your question? I always honor stops. I don't trade anything without stop losses. Stop on Disney would be 111. So if it touches the yellow, stop would be the purple, and the target would be like 125. Can you show me how you use stock charts for the cloud? So all we did is we scanned for stock charts. If you didn't have a good charting package, you would go like this. You go to the home screen, you scroll down here to predefined scan results, you scroll down here to candlestick patterns, and you click on moved above the cloud, move below the cloud, which will then give you a list of things like this. And then you sort those by volume, like Cyper Semiconductor, CY. And then you'd come over here and put CY in this, CY. I don't remember if it's above or below. We'll see here in a second. So CY was in the cloud, and it is back above the cloud, so that's a decent long. Okay? So that's how you use it. Works on VXX. VXX. Let's see if it works on VXX. It looks like it works on VXX. It was a short here, and it's getting ready to go to 24 overhead resistance, I would short it there. Would be interested to see, well, XOP, yeah, it works fine on ETFs. You're fine there. I don't have to deal with weird markets every day. There you go, perfect. Do you use options instead of stops for hedging? Both. I mean, I will hedge in pairs trades, or you can hedge with options, or a lot of times I'll hedge with futures. Used with stochastic and with Aaron, works wonders. Try it. Oh, thanks, Rand. Appreciate it. Your website is not working correctly. Cannot place order. Let me just see here. It should be working fine. If you're having problem with the order, call the office. I know Jared is here. He can help you with that. Here's the telephone number. The order form looks good. Here's the telephone number if you're having problems with your order form, 859-963-3445. I hedge by going to cash. That's not really a hedge, though. That's cash. Do you follow fundamentals at all? No, I don't follow fundamentals at all. I think fundamentals are a joke. I don't mean anything bad by that, but I don't think Tesla or Amazon fundamentals make a whole lot of sense, but they're still going up, right? So I'm more of a technician than I am a fundamentalist. Now, that being said, I've been in AMZN since it's $75. That's not a fundamental play at all. This thing just barely makes any money, right? But I'm in it from 75 as an investment. Gene says, I placed the order on the website and it worked just fine. Where are the other indicators, the ones on the lower part of the chart? I don't have any. Are you talking about power play? That's a different thing. We're just talking about Ichimoku here. Just Ichimoku. All right. I'm out of town. The link is in your chat box. I appreciate you guys showing up. Enjoy the rest of the day. Have a great weekend. Good luck. Hope it helps, and I'll see you on the next one.